Welcome to the Investing, the year ahead for investing and the global outlook for global and regional markets. We are going to attempt to cut through all the noise and the tweets and tell you what you need to pay attention to in the year ahead, the fundamentals, the drivers, the stories that we are going to be telling. And so to start out, we want to sort of frame the year ahead, the coming months, and what the risks are, what the drivers are, what the outlook is. And for that, I'm going to ask Colin to speak to us a little bit to paint that broader picture.
Okay, for us, the fundamental outlook hasn't changed that much. Yes, trade is giving, if you like, sand in the cogs of world trade, but global growth remains firm, inflation remains controlled, interest rates are going up slowly, central banks haven't deviated from the path that they have said they were going to be, so most of that's priced into the market. What I would say today is that the market is pricing in something slightly worse than that. So they are predicting that tariffs are going to have effect on growth, going to have effect on inflation, and is also going to have an effect on what central banks' reaction functions are as well. So that's our core scenario. So we also think about what risks are out there, and I know that you're going to ask me that later, but let me get that out first. So what could slow global growth? Well, number one is a much higher oil price. So the oil price is up 50, 60% on a 12-month basis. If you look back through history, you have to see an oil price rising about 100% in order to be a precursor to a much slower growth environment. And so from that perspective, it's not there yet, but the risk is rising, especially if you look at the tensions in the Middle East. And if there's a conflict in the Middle East and the oil price goes up, then that will cause a problem. The second issue we're also focusing on is the US dollar. And this is something that I've been talking about for some time, is that I couldn't understand why in the first quarter the US dollar was weak. Interest rate differentials, growth differentials, flow of funds were all pointing to a stronger dollar. And so from that perspective, you should have seen a stronger dollar in Q1. One of the factors that we've seen that's turned the dollar has been this repatriation. Now, $300 billion worth of US companies' earnings overseas has come back to the US in the first quarter alone. Now, estimates range between about 500 billion to about $1 trillion is going to come back in total. So we're quite a long way through that. But I think that's what really turned concerns about the weaker dollar into, well, perhaps it should be stronger from here.
Excellent. Great. So that's the broad framework. So we need to worry about oil and we need to worry about the dollar and never mind the trade tweets. I'm wondering how this broader perspective feeds in from, to ASEAN countries, Vietnam and Thailand. And would you like to give us your perspective of these risks and the outlook from a Vietnamese perspective?
For Vietnam, we actually had one of the highest GDP growth in the first half of this year at 7.1%. And it's, the target is for 6.8%, and I think that we'll be able to achieve that. I think basically I agree with Colin in the sense that I don't think the fundamentals have changed much, despite a lot of noise around the trade war between the US and China. I think for Vietnam, the fundamentals are very strong because we have we are still recording very high growth in FDI inflows. The disbursed FDI is consistently at 8% of GDP, and that has been driving export. We are achieving very high export growth last year at 21%, and export last year stood at 97% of GDP. And on the other hand, we also have a young and large population that would fuel the growth of the domestic consumption boom. So we have both the export and the domestic consumption driving the GDP growth forward.
Right. And the risks that Colin mentions, oil price, dollar, how do you think that those will be kind of minimized or at least offset by these strong underlying factors?
For Vietnam, fortunately, we are similar to Malaysia. We are energy neutral. For Vietnam, at least, we do not have to import any oil. Yeah. And in terms of the dollar strengthening, it has impacted the stock market on the sentiment front. On the fundamental, we actually have a very stable currency year to date. The depreciation in Vietnam is only at about 1.5%, which is significantly better than Indonesia and Philippines, because we actually are running both a current account and a trade surplus. So that has been helping us. Of course, I mean, the risk remains to be seen where the trade war escalates to, but at least for the time being, I think that we're in a good position.
Similar story in Thailand, Pakorn, except that in Thailand has unfortunately seen its stock market really seen a lot of outflows in these past months, almost the most amongst all Southeast Asian countries. So how does that translate for you into your outlook?
Yeah. When you look at Thailand this year and last year, actually, you can see that the fundamental of Thai country is actually stronger than last year. When you look at the growth of the economy, at the moment, the latest number is that the Thai economy grow at 4.8%. And recently, government come out and saying that it expected that the growth of the economy going to grow around 4.2 to 4.7%. Come from the increasing in the export, in the tourist industry, on the investment in the infrastructure project by the government. And also we saw a pickup in the consumption and the private investment. And on the other side, when you look at the government side, the fiscal policy is very healthy. At the moment, the public debt to the GDP level is at around 43%. And when you look at the foreign international reserve, at the moment it's at the highest level in the last, I would say, 10 years, at $250 billion US. So you can see that fundamentally the Thai country is very strong. However, when you look at the change and the change in the sentiment in the foreign investor, and it shows in the outflow of the money from the Thai market, it's actually the event that we see all over the world, not just emerging country, but also from the equity market in the developed country. And this is, in my opinion, is the time that the investors are actually adjusting the portfolio composition that they have. When you look at the investment in the emerging country during the past few years, for example, in Thailand, the foreign investor get at least the return from the Thai market almost 20% per year for the last 2 years. And at the moment, after they sold the proportion of their holding, at the moment, the most recent number of the foreign investor holding in Thailand is at still around 30%, which is our average long-term holding, which means that at the moment they are selling their profit during the past few years, and those are the number that we see. And when you look at the size of the outflow and you compare it with the depth and width of the market at the moment, is actually, you can see that nowadays Thai market cap is around at $550 billion US, coming up from 360 a few years ago. And also the liquidity, at the moment we are trading at 2.2 billion US dollar per day on average daily, compared to something like 1.5 billion US dollar 2 years ago. So this is comparatively, in my opinion, the reason why we see such a big number of outflow, but the market hasn't moved that much.
Right. So in that sense, again, the picture being one more of, the outflows are happening, but there's underlying support there that still happens. Do you share that view, Colin?
I do, and it's quite interesting at the moment because you start to see opportunities arriving in Vietnam, Thailand, Indonesia, where the global flows have flown out, but they've sold indiscriminately. They've sold their equities, they've sold their bonds, so not based on any fundamentals of these companies within the countries. So that for active stock picking, active bond picking is an opportunity because these companies are now cheaper than they were, but the fundamentals of these companies haven't changed. Mm-hmm. And so that, to me, is an opportunity for the active managers in the region.
Right. And just a reminder to the audience, if you have any questions for our three panelists, please do send them in, and we'll pose them to the panel. How do you feel? Maybe a question for you too, and Kun Pakorn. How do you feel about ASEAN as an investment? We heard about the fragmentation of ASEAN. We heard about how ASEAN countries were more domestic and inward-looking. How do you feel? How does that mesh with what you're seeing your investors do?
In my opinion, it's quite on the contrary side, because when you look at the Thai company nowadays, when we look at where their revenue earnings come from, actually almost half of the revenue of the Thai company who report their source of earning, it actually come from outside of the country. And the biggest destination of these companies who get the earnings are from ASEAN and CLMV. So in my opinion, I don't think that we are more like segregated, but we are more like the regionalized. And that's not just the reason why I think that Thai company only, it would be more for the investor also. When you look at investor nowadays, they have so much opportunity to invest, not just in the region, outside of the country, and also internationally. So I would disagree that our economy has been segregated, but I think we depend more on each other even more than it was before, especially after a few days that we heard Mr. Trump has been talking about.
Yeah.
From my experience being in Vietnam, I actually see that Southeast Asian investors are very important to us. Singapore consistently ranks as the third largest FDI investor in Vietnam, followed by Malaysia and Thailand. In terms of trade, ASEAN is actually our fourth largest export market and our third largest import market. And in terms of the capital markets investment, we are seeing increasing amount of investment from ASEAN investors, including Thai investors. The Thai corporates, conglomerates, including Accenture Group, have made heavy acquisitions in Vietnam in the past few years, totaling at least $10 billion, acquiring companies in consumer goods such as Vinamilk and Sabeco, the national champions in Vietnam for milk and beer respectively, as well as supermarkets. As we saw this morning, 15% of Accenture Group's revenue now comes from Vietnam. Yeah, so that speaks for itself, I think.
Vote of confidence of ASEAN in ASEAN, right, in a way. Do you think that the capital market structures in, say, Thailand or in Vietnam, do they need further development? Are they developing along the lines as they should? Do you think there's a need for greater, faster development in order to keep attracting these funds and to provide the security that investors are looking for?
When you look at the need for the infrastructure investment in the region, you're going to see huge opportunity. For example, in Thailand, in Laos, and in the future in Cambodia and Myanmar, and especially in Vietnam also, in my opinion. Where would the money come from? At the moment, most of the funding actually come from the government borrowing. However, the government has a limit to borrow. In the future, if they want to expand the operation, if they want to expand into the new greenfield project, how would they come up with a solution? In my opinion, the funding from the capital market would be so important. The participation from the private side would be so important. How would the government weigh the balance between the ownership and the ability to grow? I would say that the use of the capital market, for example, like an infrastructure fund or infrastructure trust, or even the cross-listing of the equity in the regional market would be so important in the future.
Would you agree with that too?
For us, our experience has been that the capital markets have grown by leaps and bounds. In 2015, the size of the market was just about $51 billion, and today the stock market size is $180 billion. The bond market in Vietnam is also at $40 billion, but the majority of that is still in government bonds.
Yeah.
Yes, the liquidity of the stock market has improved vastly as well, and I think that a lot of that growth is attributable to the government's effort in enhancing transparency and foreign ownership, as well as speeding up the equitization or privatization, as it's more commonly known.
We talked just now before the panel a little bit about there needing to be a niche product, or something that appeals to investors to be able to invest in ASEAN. It was your idea in a way. Would you like to expand on that a little bit?
For example, at the moment, when Thai investor would like to invest in CLMV, Cambodia, Laos, Myanmar, Vietnam, it's quite difficult because the exchange in the market in Laos has, I think, 7 stocks at the moment. Cambodia have 4 or 5. In Myanmar, they have 3. And it's quite difficult for the foreign investor to go there and invest, exchange the currency into the local, and then going to the stock market, investing and put it in a custodian account. So the alternative that we are trying to provide is, for example, we have an index on the CLMV exposure. a Thai company who actually have a majority part or big part of their earnings come from this country, and we put it into the index and show it to the investor that this is the example of Thai company that has been doing a lot of business in those countries and has exposure, and Thai investor can actually start to invest in those countries now. Yeah. In the future, we expect that what can we do next? How can we get the company in all those markets to be invested above in Thailand? If we took the company to do the listing here, it's going to be quite difficult because certainly it's going to cannibalize the growth of those markets. But supposedly that we have a DR program, depository receipt program, and put a depository program in here in Bangkok and get and buy, has an intermediary go offshore and buy those stock and put it in the custodian account and sell it as a DR product in Thailand. That would create both liquidity and the knowledge and the linkage between the two exchanges. In my opinion, at the moment, this is the way that the exchange would like to do. We have the DR program in Thailand already 2 years ago, and now we are trying to work with the other country exchanges to create this DR program.
Would that be something that you feel would be appealing to your investors or?
I think so, and I have to admit that I am a free trade advocate.
Yeah.
So anything that deregulates and takes the sand out of the machine helps. And that makes it more attractive for investors, full stop, because they know that if you're going to invest, you know that at some point you can take your money out. For those people that are here, then obviously you're more susceptible to swings of what's happening in the global economy and out of your control. So I can understand why the balance needs to be there and why people take and you want to take small steps towards that. But I think deregulation is a big win if the countries are able to do that.
For me, maybe I just add, because I manage a UCITS compliant fund, and UCITS is basically a European standards for standardizing the requirements, the corporate governance requirements for funds. So maybe we can have a similar platform for ASEAN countries.
Oh, that would be great. I hope the regulators are listening.
When can we start?
You can start. We have a question from the audience, and they would like to know whether, though the economic numbers of Thailand look healthy, the question is, why are we still hearing, why is the sort of the public sentiment of the economy in Thailand not as positive as the fundamentals would indicate? Would you care to comment on that?
I would say that sentiment is very volatile and very personalized, even though rationally the fundamental is very strong. But when you look at the global situation, certainly it creates uncertainty and uncomfortable situation for the investor. And also, when you look at the growth or the pickup of the economy, it's not actually is a overall pickup, but it's a segment by segment pickup, and the speed of the recovery are quite different. That's why I would say that in some area or in some person view, they might think that it doesn't recover that much yet, but in some view, it say that wow, we see a lot of growth, we see a lot of improvement. So in my opinion, I think we need to see how this recovery come back overall, not just in part of the economy.
More equal distribution, as the central bank governor mentioned. Yeah. So one question, the other question from the audience, which goes also with a polling question that I had, which is basically the question from the audience is: will we see a bear market in 2019 or 2020? My question for the polling was going to be: do you believe the EM sell-off has bottomed, or are we going to see further sell-off? So I would love if people could vote on that polling question, and meanwhile we can discuss the bear market question, which is a very loaded question. And who would like to take it first?
Well, I can start with the Vietnam example. At the peak of the market, which happened in early April, the stock market in Vietnam actually exceeded the previous all-time high and established a new all-time high, basically. But since then, the market has fallen about 25%. And at the moment, actually, a lot of stocks are now looking very interesting, very cheap even. because on a stock market level, the average PE is about 15 times for this year. But if you look at some of the mid and small cap companies, they're trading at 6 times to about 10 times PE, while earnings growth on some of these companies could be from between 30 to 60% for this year. Wow. And on a normalized basis, it could be easily 20 to 25% for the following years.
So that's definitely, there's some hidden gems there to be had. How about, what's your view on recession, bear market in 2019 or 2020?
So I think that the recession will start in the US. It always does, and always seems to start with US monetary policy being too tight. I would argue that with the flows going back to the US, actually US monetary policy's been fine. If we think of the amount of flows from just repatriation, that's been twice as much as the central bank has taken bonds off the market, and tightened quantitative easing program. So US liquidity is fine. We think that the US cycle's fine. It might be coming towards the later stages, but that's still a year to 18 months away before we see the recessionary pressures start to impact on the US. And once the US has problems, then that's where the rest of the world starts to have a problem. The other large economy that we should talk about is obviously China. And they're doing a very good job of managing this transition from an export-led industrial nation into a more domestic, consumer-led. And the central bank, PBOC, has done a very good job managing it so far. Now, we'll never know the sort of the nitty-gritty and what's going on underneath, but on the surface, they seem to have done a very good job of managing the situation. So I think we should continue to have the faith that they are doing the right things going forward. So we're pushing out our expectations of a global recession for 18 months.
18 months, okay, great. And
for the Thailand part, when you look at the market, it's actually peaked in January and has been going down recently. But when you look at this trend and you look at the company performance and the economic picture, you see quite a contrary picture. It actually should be picked up, but now it's going down. So our question is that, if the external factor is that important, we need to look into what are they. The first thing is that, first, the US start to raise the interest rate a few times already. Secondly, the tapering start to come up, especially in European market. So you see a lot of fund flow outside on that. And lastly, the trade conflict. Certainly, it will affect our export, but how much we still don't know yet. So these are the three main uncertainties, in my opinion, that come from the outside the country. And certainly, the market would pick up quicker if we start to be clear on what the direction would be.
Okay.
I think the clear transmission mechanism is the dollar, because if you look at the US, it's going at 3.5% to 4% GDP growth, and they just had a massive $1 trillion stimulus over the next 3 years. So, from that perspective, if the US is going on this growth trajectory, that will pull up the rest of the world. Right. The key point and the key rebalancing will be the dollar.